What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 17th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to go ahead and talk about what will be the next major catalyst to carry us to high-end levels like 100 to 200K. It's going to be a conversation that we've not only talked about way back in the previous market cycle of Bitcoin and cryptocurrencies, but outside of that as well, spending some time to understand what kind of capital inflows will be required to get to these heightened targets of 100 to 200K. So we're going to be diving straight into it, guys. Let's not push it off any longer. So the first thing I want to talk about here is where we're at right now, right? If we are within a mid-cycle correction, as we've been discussing about over the last two videos, the important thing to understand from here is how do we actually continue going forward? Markets only move up when there is an influx, an increase of inflows of capital, right? So people buying, in this case, depositing new capital into the market and actually outpacing the available supply on the order book through what's known as limit orders, right? You know, those people who are willing to sell at fixed market rates. We need more market buy orders coming in and driving up the price on the order book. So the only way we're going to do this is by getting creative and coming up with some ways to get the market excited, to solidify the reputation of the market, to actually bring in new ways of bringing capital into the market and allowing people to garner exposure, etc. Right? These are usually the two major ways that you can drive up a market, either through derivatives that will solidify the presence and the tradability of the market, or on the other end, an actual new on-ramp or inflow of capital that's going to set new precedents of demand for the asset. Well, one of those that we had in the last cycle that got everyone really buzzed up was the launch of the Bitcoin futures contracts. So for, up until this time period where it was pretty much at the end of October, this announcement came out in 2017. For the previous years of Bitcoin had been trading for about 7 years prior, and its markets were mainly crypto exchanges. There weren't any forms of derivatives really live at that time. There was a few platforms where you could do maybe, for example, some margin trading, like BitMEX in this case, which is now becoming kind of a relic of the past. You now have, as of 2017, the option, though, for traditional markets to get some degree of exposure where they could trade futures contracts and the traditional exchanges and formats they were used to, right? And the CME group had quite high levels of success, and this also led to the CBOE, the Chicago Board Options Exchange, one of the largest exchanges on the planet for derivatives, to come out and actually follow suit. And when these two events happened, when these two events finally came into fruition, when they were just solely announced, in this case, up into the point of launch, from the announcement to the point of launch, it led market valuations to climb all the way up by over 170%. 170% move on Bitcoin within, really, generally speaking, about 4 to 6 weeks. And when they launched, it was the peak top signal for the market. So it's important to understand here whether or not we're going to have one of these catalysts that can actually bring in not only more trust to the market, but outside of that as well, interest and, at the end of it all, more capital. And it wasn't that the futures contracts brought in per se more capital to crypto. Futures are a form of derivatives. They're an asset class or a form of financial vehicles that are trading on top of the actual spot market where people are buying and selling Bitcoin. But this is an example of the first way you can bolster markets higher, and that is by solidifying the trading environment, getting more people interested, starting to mature Bitcoin as an asset, right? And I know people say, oh, you don't need futures contracts to mature Bitcoin, and we're all very rebellious, but that's actually a very important thing to have, a variety of markets and entry points for trading Bitcoin, and that brought in a lot of buying interest in the actual spot market, which is what we saw here. So that was one example, right? That's the first type of example. But we also have a secondary one, which is just really new buy-side demand for this asset class? Well, we saw an early example of something I want to talk about here that I think is very probable later on in this cycle. And this is again going to play into why I believe we're in a mid-cycle correction rather than a bear market. One of the major things that led Bitcoin's price to rally the way that it did over the last couple of months, really over the last year, was not just the micro-strategies of the world, the corporate treasurers. That for sure has played a role in changing the supply and demand dynamic of Bitcoin, considering the supply shortage of the halving, etc. It certainly has played a role. But what really has played a significant role in bolstering the higher amounts of prices that people are willing to pay for Bitcoin is what we've seen with Grayscale, with the Grayscale GBTC product, the exchange traded notes that are available that actually have physical Bitcoin backing it. Now, of course, as we will dive into it here, and I think you guys might be able to see where I'm going with this, there are some limitations with the ETNs. Right? Not everyone can access ETNs, and outside of that as well, with ETNs, there are certain types of capital requirements, etc., that make it where this is not as lucrative or available to everyday market participants as an ETF or an exchange traded fund. Now, if you guys have been here for a long period of time, you'll remember back in 2018 and back in 2017 when there was rampant conversations about, oh, Bitcoin ETF, it's right around the corner. We're going to get a Bitcoin ETF. We got to get it, right? Well, it's been a lot longer than I think most people anticipated. And, you know, there's actually, looking back on it, there was one of the head ETF product builders for SPDR, Spider, which is one of the major kind of ETF producers. They had predicted that it was going to be 5 years from 2017, so 2022, until we would actually see a Bitcoin ETF product. Now, this is a topic that you might see in the headlines from time to time. The SEC getting a variety of ETF proposals and constantly delaying those decisions to either approve or reject a variety of these ETF products that have been submitted by companies like VanEck, for example, which is a very large and reputable financial institution that makes these financial products to garner exposure to a variety of different assets, right? And the SEC has again been on this kind of tirade of like, hey, we haven't had enough time, we need to continue reviewing these proposals. And it's not so much that they're per se delaying the review of these individual ETF proposals. There's been a variety of proposals that have aimed to succumb to the actual needs and desires of the SEC. But the real answer lies here in whether or not the SEC feels that the market is ready, that everyday participants, basically any type of investor from accredited to everyday mom and pop investors, if they're ready to be able to be exposed en masse through brokerage accounts and retirement accounts and pension funds, to be able to get exposure, some of that net worth, into this volatile and crazy market. Well, it's ironic because as much as the SEC has claimed this, this has got to be one of the few areas where I really have to say the SEC has fallen short. First off, if mom and pop investors want to go out and they really want to go get involved in crypto, they can go do it now. You know, they could go buy on an exchange, they could buy through a crypto wallet. But the other thing as well that's important to note is that there's a ton of crazy high risk and decaying projects that I can go invest in right now, or financial products like leveraged ETFs. I can go buy volatility ETFs. I can go buy a ton of things that at the end of the day are really risky for me as an average everyday investor, right? But of course, those have been approved for a long time, and the SEC seems to see no problem with that. But they do see a problem with the volatile swings that can happen on occurrences for Bitcoin and cryptocurrencies. So that's the concern here. And I think that Sam from Sam Bankman-Fried from FTX has really brought up a good point here, which is that if you go through, there was a recent article where they interviewed him and asked about the prospectus of an ETF, and he put this really well. Generally speaking, he basically said that at the end of the day, the SEC is just playing a delaying game until they're at the point where they really do feel confident that the markets aren't manipulated, and if there is manipulation in this case, that they can know where to go to hold people accountable and stop that manipulation, right? Now, the important thing to understand here is that any kind of supposed manipulation, and I think this is the conclusion the SEC won't come to today, it won't come to tomorrow, it won't come to in a week or a month or a quarter or possibly even a year, is the sheer fact that any kind of manipulation that can happen in crypto can happen in any market. It's the kind of manipulation where someone owns 5% of, or not saying one person, but a group collective might own enough Bitcoin to slip the price 20-30% in a single day or two. And there are a lot of disincentives with derivatives markets. But all of this exists in a lot of traditional markets already as is. So again, I don't think that that's really a fair assumption. I'm not saying that what Sam's saying is not correct or what the SEC is claiming is not correct. Yes, there can be manipulation in crypto markets, but we've seen it, large financial institutions, trading desks, and JP Morgan manipulating silver markets for nearly a decade without regulators really clamping down, right? So again, all kinds of problems like that exist. But I digress. It doesn't matter what we feel is right. What really matters here is what the SEC is going to do. When will it finally come to this conclusion? Well, I really think at the end of it all, you're going to need enough of the SEC commissioners, in this case, the people who play a role at the SEC, to finally tip over into supporting crypto rather than being bearish or skeptical or negative on crypto. Because the proposals here, we already have plenty of them out there. It's going to be a matter of when that pendulum swings. And I think that we've got a good chance with that prediction that we heard back in 2017, that probably in 2022, and this would play into the expanding cycles theory and further solidify that we're just in a mid-cycle correction, that later on in 2022, possibly leading in to early 2023, that is when we could get a Bitcoin ETF. Now, we'll know about it ahead of time before it actually gets built out and actually is available for people to trade or to invest in. But in the interim, we can look forward to the exciting release and news of that, because when that news comes out, the wave of speculation we are going to see is going to be far beyond what we saw back when we had the release of the CME futures contracts for Bitcoin. I have a feeling that the ETF news will come out much earlier than where we got the futures contract in the previous cycle, right? This was just a matter of a couple of months, 2 to 3 months here. It was really kind of November 1st in a sense, going into mid-December, so about a month and a half from news event to release. I think that what you're going to see here very clearly is a lot of hype building up over months from a certified announcement for an ETF. And then when that product actually launches, you're going to get a lot of movement to the upside still. It's not going to be just a buy the hype, sell the news type of event. Again, we'll have to be patient and see what happens, but I think that this is going to be a major solidification for the idea or for the probability for Bitcoin to go towards 150, 200K in this cycle. And it's going to be crazy. It's going to be ballistic. So again, I don't think this is happening anytime soon, guys, but I do want people to be prefaced on the idea that we still have yet to have this major catalyst, which, bear in mind, for those who may not know, I'll go ahead and I'll pull up a good long-term chart here. If we want to take a look at what happened to gold when we had the ETF, right? So we've got a lot of history here on TradingView that we can work with gold. And what's interesting, as you can see here very clearly, right? That once we got the gold ETF here in the early 2000s, right? We started to get an ETF formulated here. I don't know why it's showing percentages. I'm going to go to the regular chart here. We can see that gold kicked off its next major cycle going into 2011, a multi-year bull market as gold ETFs started to become mainstream, right? And again, you can see here that these kind of catalysts of capital inflows, massive buy orders, saying, if all of these ETF shares are going to have like-kinded Bitcoin backing each share, right? Or maybe each share has a fraction of Bitcoin backing, right? Either way, if there is an actual one-to-one backing for the dollar value of those Bitcoin ETFs with real Bitcoin, that is going to kick off a massive move. And just for some perspective, just to understand it here, guys, and I know the numbers have actually increased by now. If you want to understand just how big of a deal this would be for Bitcoin as an asset, pension funds back in, I think it was 2018 when we were talking about this ETF topic, pension funds had a value in the United States of around $42 trillion. It'd be safe to say with the inflation that we've seen, with the massive printing of money, and the general increase in the value of those pension funds due to the appreciation in equity markets and in other assets, that we're over probably 50 trillion. Just 1% of that wants to garner exposure to Bitcoin, or half a percentage. Just 1%. Would be $500 billion of inflows of new capital. Half a percentage would be $250 billion. So you're talking about a range of a couple $100 billion going in to this new asset class with the creation of an ETF or a set of ETFs. It's very likely that the SEC would just rapidly start approving a lot of them once they feel comfortable with the market being the way that it is. That's going to be a major event for cryptocurrency markets. So anyways, I hope you guys find this very interesting. I know that for myself, I think this is going to be a catalyst event in crypto. I'm very excited to see what it's going to do to crypto and what it'll do with the way the markets move in crypto long term.